Good morning, good afternoon, and welcome to Using Elliott Wave Lenses, Elliott Wave as an overlay to any strategy with Juan Maldonado and myself, Jody Samuels. Markets can be very complex, but when you understand their makeup and then break them down into patterns, then we begin to recognize these patterns in our trading. And when we internalize these patterns, we can trade them over and over and over again. As an education company, we look at the convergence of Fibonacci, Elliott, and harmonics because we believe that the market is made up of all of these sciences that come together in beautiful harmony. And what we're going to focus on today is one portion of that, which is using the Elliott Wave lenses. Welcome to our webinar. Today, we're going to cover the following. We're going to talk about using the Elliott Wave lenses, and then Juan, I'm going to turn it over to Juan, who's going to show you wave counts on the euro, the dollar yen, and the Aussie, which you will hopefully be able to take away and use in your trading. But first, I just want to thank FX Street for having us here today. And I want to thank you for taking time out of your busy schedules, your busy trading schedules, your busy lives, for being here today. Juan and I really appreciate that. So just a little bit about ourselves. My name is Jody Samuels, and I've been trading currencies my entire career, starting on Wall Street as an interbank trader with JP Morgan. And over these many, many years, it's really been focused and guided my trading throughout all market turmoil, throughout all fundamental turmoil. It's really been Elliott that has guided the way, which is why I'm just so passionate about today's topic. We've taught thousands of students over the year how to use Elliott Wave as a top-down approach with any trading strategy, and you can do that too. Juan Maldonado is a very gifted analyst. He's the Elliott Wave strategist for FX Traders Edge. We've been working together for the last few years, and he's very gifted. I know this because I've worked with many Elliotticians over the years. So you will understand, hopefully, what he has to share with you, and you will appreciate what he has to share with you in just a few minutes. But first, let's look at the three pillars of trading success. What are they? What do you need to have in your trading arsenal in order to be prepared as a trader, in order to start to run your trading as a business finally, and not continue to look for the next greatest trading strategy that's out there all the time? I'm sure many of you can relate to me that whenever something comes across your internet, your email, you're busy checking it out. Right? Who can honestly say that they don't check out any new strategies anymore? Who can honestly say that they're comfortable with what they're using and they're not continuously looking for that holy grail? I'm not so sure that you would want to admit to that. But we have three pillars of trading success. One is the analysis, two is the strategy, and three is coaching and accountability. Without one of these three pillars, it's highly unlikely that a trader will be running their trading as a business. Let's just look at each one separately for a minute. The first is the analysis. And as I mentioned, we use Elliott Wave Analysis. Ralph Nelson Elliott studied various market indices over a 75-year period in the 1930s, before they had computers, when he was bedridden with an illness. So he poured over thousands and thousands of stock market charts. And what he discovered were that stock markets traded in repetitive cycles. That's right, they repeated themselves over and over again. And these cycles reflected the emotions of investors. Well, the same is true for today. The markets, the cycles, the waves reflect the emotions of investors today. And the emotions of investors are based on their take on the fundamentals, what's going on in the world, what's going on in the markets today. A key pillar of achieving consistency is to have thorough knowledge of the market to determine possible future scenarios, to be prepared of the trading opportunities that arise. So we use Elliott Wave Analysis to provide this top-down approach, this context of the market. As we mentioned, the wave principle, the patterns are tied to collective human behavior. And if you look at the chart to the left, you see that it's made up of the Fibonacci sequence. So Fibonacci plays a major role in Elliott Wave Analysis. From the trend move to the left to the corrective move to the right, it's all about the Fibonacci sequence. It's all about the ratios involving the Fibonacci sequence. How far will a market travel? Well, do a Fibonacci projection. How far will a market retrace? Calculate a Fibonacci retracement ratio. The most common are 38.2, 50%, and 61.8%. And each wave within the structure has its own favorite Fibonacci ratios that it typically abides by. So to the left, we have the impulse wave. To the right, we have the corrective wave. And this is all part of the analysis. Why does Elliott Wave theory work? It works because of the science of chaos, which describes how complex shapes look the same at various orders of magnitude. And we call these occurrences in nature fractals. So fractals are what it means when you can identify the branches of the tree in the branch itself and in the tree as a whole. So picture this in markets. Or picture this fractal image, where if you take a smaller portion of this image and then magnify it, you find a new image with the same structure. That's called a fractal image. You see the structure showing up in this picture over and over and over again, or in this picture over and over and over again. The same, by the same token, you can see this in the markets. The markets are fractal. Find the patterns, see the patterns, pocket the profit. Once you internalize the ideal Elliott Wave setup, you will take the ideal end of trend trades and the ideal trend continuation trade. This is where we put together Elliott with Fibonacci and harmonics. Harmonic patterns show up at the end of the trend. Harmonic patterns show up during the trend. So when you can merge the two, it gives high probability trades, which is just fantastic in our trading because that's what a trader needs. We need to weed out the low probability trades and identify the high probability trades. This is the 8-wave structure, the impulsive structure, the 5 waves up and the 3 waves back. We start at point 0, we end at point T for the impulse wave. Here's an example in the market. This is the dollar yen, this is the weekly chart. I took this out this morning. And what we can usually, how we can capture the trend is by drawing a channel, connecting the points in that trend. You see that I've labeled this as a 1, 2, 3, 4, 5 wave pattern, and it's all captured within the channel. I've also put up the MACD, and for those of you that use divergence, that's great. And for those of you who don't, I would strongly recommend that you use divergence to see the end of the trend. When you see the market petering out at the end of the trend, and you can identify that through divergence, it's probably time that the market is going to turn around and go the other way. And when you see this trend line break in the dollar yen, it probably means that we're going to go lower in a corrective sequence that could even go, that will probably go as low as where we have the wave 4 there. So as long as we stay within this channel, the trend is still up. But this is the first clue, the first sign that maybe the trend is breaking once we break through this channel. We haven't broken through this channel yet. This is a 3-year channel. This is a 3-year impulse move. Looking at the next chart, we have the dollar Canada, same story. This is a daily chart. So we have a nice entrenched uptrend, and we have a weakening of the trend. So as long as we hold this channel, we could potentially move higher in a wave 5. Okay? If we break down, then we're gonna have a deeper correction. So start to draw your trend lines and your channels because it really helps. So what we just described is a 5-wave pattern with the channel. So when the wave 1 starts at point 0, the market is still bearish at this point. There's no change in trend evident. Then the market retraces for a wave 2. And these wave 2 retracements are usually sharp. This is where we see our double bottom. Finally, we get to the greatest potential in a wave 3. This is a very powerful uptrend, an emotional thrust, most often the longest and the strongest. And we're going to have a look at those 2 charts again in a moment once we go through the wave characteristics. That's what we're doing now. We're talking about the characteristics. And in order to understand Elliott, you need to internalize these wave characteristics. Wave 3 is your steep trend. This is the trend that you want to get into. Wave 3 also breaks down into a 5-wave sequence. Then we have wave 4. This is where we see profit taking. This is where early traders take profits and others enter long. And sometimes there's whipsaw price action because wave 4 corrections can be simple or they can be a bit complex. And when they are a bit complex, that's where we see the whipsaw. So it's best to get in on the dips, not on the breakouts. On the dips because then you can set your stop below the wave 4 horizontal trend line. Support line, we call it. Wave 5 is the final advance. It's the last struggle to create new high prices. We see momentum divergences, blow-offs, and failures. Blow-offs typically in commodity markets, failures typically in currency markets. The 5th wave failure is when wave 5 doesn't go too much above wave 3. So this is the 5-wave sequence. Now let's go back to our dollar-yen, our weekly dollar-yen chart, and let's look at the wave personalities to identify what we just learned. You can definitely make out the wave 3. The wave 3 is the steepest trend move. The wave 5 peters out. Yes, wave 5 makes a new high above wave 3, but it peters out. And once we complete the wave 5 sequence, then we have a deeper corrective sequence, which we will outline shortly. Now notice what happens at a wave 3 peak. We have a peak in the MACD. And that's what typically happens because this is usually the strongest move. It's when you see the most green candles, green meaning bullish, and you can see that in here. And this is when you see a peak in your oscillators. For the wave 5, you see a lower peak. That's how we define divergence. Price makes a new high and the oscillator doesn't. So this is the dollar-yen. At the beginning of the trend sequence, where we have point 0, waves 1 and wave 2, you can see that wave 2 almost double bottoms with point 0. It comes down at least 61.8% because the market isn't ready for a trend in a new direction. Don't forget the dollar-yen had come down a very, very long way before it finally turned around. It took some convincing in the market for the dollar-yen to continue to move higher. But once it did, there was no question that it was a new trend and a change in trend. And actually, I didn't show you the entire weekly chart, but if you look at your dollar-yen chart and draw the channel lines connecting the downtrend, you would see that once we broke through that downtrend, we started a new trend, just like we're outlining here. Once we break down through this channel, which is the trend sequence, we will likely have a deeper correction. Looking at the dollar Canada, same story. The wave 3 peaks in the MACD oscillator. It's the strongest move up. Now, it took a while for this wave 3 to get going, admittedly. It wasn't a straight move up, like a rocket thrust, but once we hit the 106 area, it thrusted up towards the 113, 112, 113 area. So not all wave threes are created equal, and not all waves are created equal. This is the corrective sequence. So once we break down, we can expect something like this to occur. So this would start at the top of wave 1, 3, or 5, and same story. The market is still bullish in an uptrend, right? But this is a correction, and they want to buy the market dips. Well, wrong, because buying the market dip, this is called the wave B bull trap. Buying the market dip here and watch it go here and turn around, it's not meant to make a new high. This is the corrective sequence. In fact, this is the wave C. It's called the killer wave C, and this is terrific for identifying a move down of the magnitude of the wave 3. So this is called the killer wave C. It wipes out the long positions as prices drop relentlessly. It's often an extended wave, but when it's over, and then it's time to buy. So you should look for these trades over and over again. We're not there in the dollar Canada or the dollar yen, but continue to watch those currencies. And when you do see this pattern, a wave A down followed by a wave B up, try to get in on the killer wave C down. It produces nice profits. It's usually clean and sweet, just like the wave 3. It's the same personality as wave 3. Okay, I'm going to turn it over to Juan now, but I just want to point out Juan is going to do 3 different wave counts, and if you're interested in receiving the hard copy of the wave count, plus many, many more wave counts, then you can sign up for the free trader zone at fxtradersedge.com. So over to you, Juan.
Thank you, Jody. That was great. Hello, traders. Welcome to this great webinar that we are having today. My name is Juan Maldonado. I'm going to explain the wave counts that we have for the euro dollar, the Aussie dollar, and the dollar yen. Always, after you are going to start trading, it's important to understand the context of the market. And for doing that, usually the best way to do it is to start from a higher time frame, like the daily chart or the weekly chart. For the exercise today, we're going to start from the daily chart, and we are going to do a top-down approach to find trades on lower time frames. What's the plan? The plan is that we have a 5-wave sequence here on the daily chart. There are some special characteristics here. And the first one is that we have this one. I'm going to change my color, maybe for blue. Yeah, we have 1, 2, 3. Wave 4 comes inside the price territory of the previous wave 1. All right, so that's why, that's because this is a diagonal wave, an ending diagonal, and is the only way to have the wave 4 getting inside of the wave 1. So that's why we have this situation here, something a little bit complex for the euro. Then after the wave 4, we have the wave 5, and it looks like the move is complete. The wave 5 is over, and price is getting ready to move down to the after that. So the plan will be to trade this next cycle with the Elliott waves. But now the question is when and where can we start thinking about that target, about the 127.50? And the answer is that we need to validate the end of the wave, the end of our B wave, our C wave, and the wave 5. So that's what we need to do. The first step to do it will be to have a valid reversal pattern. For example, when the structure starts, let's start from here, like the beginning, and here will be the end, right? The point T. We have the first move up, then we have a retracement, then we have another move up after that, then we have another retracement for that, then we have another move up, and then we have another retracement. As you can see, never during this move up we have something like this. A 1, 2, 3 pattern going against the previous trend. All the retracements were followed by a new high. Retracement, high, retracement, high, and retracement, high. And that's the definition of a trend. And right now we're having another opportunity to validate the plan. And we have moved down, then we will need a retracement and a new move down. That new move down will validate the idea, because that new move down will do the 1, 2, 3 pattern, and that breakout is very important, the breakout of the previous move. From July 2013 till today, we don't have a reversal yet, and price is trying to make it in this moment. So we are at a very important moment in the cycle for the euro dollar, and that's why we need to understand that situation. The market is tired. We have a divergence on the upper side, is very tired, but divergence doesn't mean reversal, and the validation for our reversal is mainly the 1, 2, 3 pattern. Okay, so while it happens, while final confirmation happens, we need to trade inside the cycle. Right here inside this candle is where we need to trade. I think that is not a good idea right now to take any position or maybe a swing trade to hold the trade or something, because we don't have that confirmation yet. Right now it's not safe to take that kind of decisions. What I would like to do when I have this kind of markets where I don't have confirmation, where I'm possible that the trend is ending, the trend is tired, the trend is preparing a reversal, the best we can do is to go to a lower time frame to find the trend and trade inside the waves. That's the best we can do. And that is one of the benefits of having Elliott Wave in your charts, because you can understand the market. Of course, the wave count is not going to be correct 100% of the times, but it's a fantastic roadmap to follow. Okay, from the 4-hour chart, let's see. Now that we understand the daily chart, we know that we are at the beginning of a reversal. The reversal has completed the first cycle inside, and is to have a 5-wave sequence against the previous trend. We have the move down, then we have a retracement, then we have a strong move down for the wave 3, then we have the retracement, then we have a new move down. This means that the markets are fractal, and we have waves inside waves and more waves inside waves. We can trade with this technique on any time frame. Okay, so 1, 2, 3, 4, and 5. The wave 1, black, is over. And now price is going to start making the wave number 2. and that's going to be the next trade. But let's figure out a way to find the safest entry for the wave number 2. And let's talk about targets. So we have a move down, and now price is going to make a retracement that is going to be in the middle of a higher time frame validation. But that's fine. We can trade inside the waves. Okay, so the target for our wave 2 will be the 138.54. 138.54. The way that the market is going to get there is through a 3-wave sequence, 3 moves against the trend, A, B, and C. The strategy to get in this trade will be to wait until we have the wave A complete, and I will show wave A, and after the wave A, to have a clear 3-wave sequence against the wave A or against the previous trend. That will be a fantastic entry to get in the trade to buy and then target the 50 or the 61.8% of retracement. But I think that is very important to wait for the confirmation of our B wave, because trying to get long right now, we don't have enough information that the wave 5 and the wave 1 is over. So trying to get in that trade is a bad idea, because if you try to trade right now to target the 61.8%, price is going to move up first to complete the wave A. So the price is going to move higher. If you hold the position, if you hold the trade, then it's going to retrace for a B wave. So it's going to be like the same price that the price is right now, but with a more safe structure to wait for the B wave than getting the trade right now. It's going to be the same price anyway, almost the same price as we are right now, but we will have a better probability waiting for the B wave than taking the trade here. Taking the trade here will be very difficult. The probability of having a new low right now is huge. We don't have enough information. Let's go to a lower time frame. Let's see how the wave A looks on the hourly chart. Okay. Also, there is something important here, that this is the killer C wave that Jody explained, and is fantastic because this is one of the easiest ways to get into trades. It's very safe, and after the B wave, of course, we need that the market behaves in that moment in a clear way. And we need like a clear 3-wave sequence for the B wave, and then comes the killer C wave that is fast, that is safe, and the stop loss is just a few pips from the entry price level, and the benefit is huge. So that's the killer wave C. Okay, so what's going on here? Here now we are on the hourly chart. The hourly chart is making the wave A. The wave A red encircled. Also, trading the markets is just a matter of patience. To plan the trade. Plan the trade. And here we have that the wave A is going to have a 5-wave sequence up. This is going to be the structure. 1, 2, 3, that is active. Then it's going to be a corrective cycle here, and then a wave 5 up. So if you are a scalper or maybe a day trader that just want to take some pips inside the waves, then you can go to the 15-minute chart or the 5-minute chart and take decisions on a lower time frame. I prefer these trades like waiting for the B wave that can give me more pips, like here from the 137.50 to the 138.54 is like 100 pips in this case for the C wave, and I have more time to plan the trade. But it's going to work the same if you want to trade on a lower time frame. It's going to work exactly the same. Okay, so this will be inside here the wave 4 and then a wave 5. Then a 3-wave sequence, and everything here is related with the Fibonacci numbers. Let's see. Okay, so once the wave A is complete, the B wave is going to start retracing, usually 38.2 or maybe 50% of the previous wave A. Of course, the skill that you need to develop here is to find the end of the B wave to get in. That's where your trading strategy comes and tell you where and exactly when you need to get in the trade. There are different kind of strategies to get in the market. We teach one that is fantastic that is called the wavy tunnel, but there are different strategies to get in the market. So the plan is to find the end of the B wave to get in the trade and then trade the C wave up. That's going to be the plan for the euro. Now let's continue with the Aussie. From the daily chart, we are seeing the Aussie moving higher. Actually, we are in one of those wave 3s that are the best to trade, because when you discover a wave 3, it's just a matter of take the retracements and go with the trend. So that's why we want to explain today the Aussie. It's phenomenal what is happening here. We have been trading the Aussie all the way up and is showing us a lot of trades. And right now it's on a lower time frame, is showing another trade opportunity. Okay, so what's the plan? We're going to focus on these waves, 1, 2, and then 3 red. Something very simple, a 3-wave move. The target for our wave 3 will be the 95.67. 95.67. Of course, that's going to take some time until the price gets to that level. And also the market is fractal. So we can go to a lower time frame and let's start finding trades inside. The next time frame will be the 4-hour chart. On the 4-hour chart, a price just ended the wave number 3 green. That was last week, and our target for that move was the 200%, 92.86. So that was a great trade. We just closed the trade right there, and we wait. Then price makes the wave 4 green that went down to close to the 38.2% of retracement, and then it starts moving higher again. So this is the 4-hour chart. And let's go now to the hourly chart, because that's where we can see another opportunity here. Okay. The wave 4 usually retraces to the 38.2%. In this case, it went a little bit more deeper to the 50%. But right there, we start seeing some candles rejecting the 50% and trying to close above the 38.2%. This will be the continuation up, 1, 2, 3, and then the wave 5. When the wave 4 is so deep, I like to target the 92.90 area, just in case. Or also there is another technique that you can follow when you have this kind of deep waves, because as I was saying, the wave 4 usually just retraces 38.2, and this is a deep wave 4. I like to be conservative with the trading. So we can use the FIBO tool, and let's see the retracements for the entire move down. Okay. Price is getting closer to 38.2% of retracement, and the next target will be 92.80 and 92.87. If price starts breaking out this area of the 92.94 area, then we will feel more confident about our wave count, because the next target for this wave 3 orange will be the 93.52. The setup was perfect until we have this deep wave 4, but the plan will be to see these reversals and the confirmation that will come at the 92.90 area, almost the 93 area, to start the move up to the 93.50. So we are going to trade this move during this week, being very careful, and that will be the target. And there is another setup that is happening here for the dollar-yen that we think that is fantastic, because after that strong move up, price starts retracing and moving lower to make the wave number 1 green. After the wave 1 green, we have the wave 2 green. The wave 2 green has 3 waves inside, and this is the daily chart. Also, we can find a relation between the wave 1 and the wave 2 in terms of Fibonacci. The retracements for the wave 2 are the 50%, the 61.8%, where exactly the price rejected on March 7th, 103.64, and the next target that we are waiting for is the 78.6, 104.43. We are expecting the price to reach that level before thinking about the shorts. If we go to a lower time frame, the market is fractal, and we can see what's going on. So let's go to the 4-hour chart. There is something about the C wave that we were seeing on the daily chart, the C wave blue, and is that the C wave always is a 5-wave sequence. In this case, we have the wave 1, wave 2, wave 3, wave 4, and then the wave 5. There is something extra here, and is that the wave 4 magenta that we are showing here, as I was saying, usually it goes to the 38.2%. This one went a little bit deeper than the 38.2%, almost to the 50%. We don't have a valid reversal yet, just some candles that are rejecting the level, the 103, that also is below the 38.2% and above the 50% of retracement, so are rejecting that level. I think that that's very important, but of course we need some reversals. The retracement down was very, very strong. That happened last Friday after the employment data, the non-farm payrolls. We know that usually the dollar-yen makes a strong move after that report, and it makes this wave 4. So the plan will be to find some reversals. I would love to see the 5-wave structure complete at the 78.6% of retracement for our wave 2. In that moment, at the 104.43, we can start thinking about shorts. The invalidation price level for the wave count will be here on the top at the 105.43. 105.43 will be the invalidation, and the reversal will happen at the 104.43. So that's going to be the plan for the dollar-yen. So that was the presentation of the wave counts for today. Now back to you, Jody. Thank you very much for your time.
Thank you so much, Juan. That was fantastic. We have trading services at FX Trader Edge. Let me just make sure you can see the, okay. We offer trading services at FX Traders Edge, and actually Juan delivers a video every single day with wave counts. But what we strongly suggest you do, if you want to get more of Juan's wave counts, please go to fxtradersedge.com and sign up to join the Free Traders Zone. And there you will be able to download the PDF with the latest wave counts on almost 18 different markets. That's 18 different markets. So we not only analyze the currencies, but also the CFDs, which are on every currency platform. And it gives you a nice overview of what is going on in the market as a whole. So fxtradersedge.com, if you are interested in learning more about our services or our education, please contact us at support@fxtradersedge.com. We'd be very happy to meet with you, to see where you are in your trading, to see how we can help you, because that's what we do. We help traders. We like all traders to succeed, and that's what we're about, helping traders succeed in their trading. And some of you might have your own trading strategy that you love to use, and it's just not working for you. Maybe we can talk to you to give you the edge. We are also coaches and provide coaching for traders. So we are prepared to meet with you one-on-one for free, just to see where you are in your trading. I will personally do that for everybody on this webinar today. I'd love to meet you, and if you would like to set up a meeting with me, an initial consultation, an initial meeting where we can discuss your trading, please send an email to support@fxtradersedge.com. In the meantime, if you just want to see the wave counts, which can help you, can provide the roadmap for your own trading, you will have an advantage. Juan is an excellent wave counter, as you can see, and also a great educator. Just sign up in the sign-up box on fxtradersedge.com. So that's it. That's the end of our presentation. I want to thank you very, very much for being here, and we'll see you next month.